I think in the near term, de-dollarization is probably overstated. It's easier to say something like, it's easier for BRICS nations to say we're going to do something than to actually agree on it, build it, make it credible, and start using it at significant volumes. India and China and the BRICS nations in general become a larger percentage of global GDP than the G7 eventually. In the near term, I think some of these moves are, while they're happening, I think people might overstate the speed of them happening. So for example, de-dollarization is not really a big theme for my, say, 1 to 2 year Bitcoin outlook, but I think it does factor into, say, a 5+ year Bitcoin outlook.
According to recent data from by Bitcoin Worldwide, there are approximately 106 million Bitcoin owners worldwide, with 400,000 daily users, 200 million wallets, and 53 million traders. This significant growth showcases the increasing adoption of Bitcoin as a global asset class. However, for Bitcoin to reach its full potential, further expansion in user base and adoption is crucial. Financial analyst Lyn Alden sheds light on the challenges faced during Bitcoin's adoption journey. Regulatory crackdowns, such as Operation Choke Point 2.0, pose a potential threat to institutional adoption and the overall progress of Bitcoin. In her interview with CryptoNews, Alden dives deeper into these challenges and explores the ongoing trend of sovereign adoption of Bitcoin. Alden also discusses the efforts of certain countries, including members of the BRICS alliance, to reduce reliance on the US dollar as the world's reserve currency. This movement towards de-dollarization could have profound implications for Bitcoin's role in an increasingly multipolar world. To gain further insights, I encourage you to watch the full video, where Alden shares her expertise on regulation, de-dollarization, and the evolving landscape of Bitcoin.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think there are kind of two different buckets here that are happening simultaneously, and they're somewhat overlapping, and sometimes the narrative gets confused between them. So on one hand, you have a lot of crypto things that are potentially violating securities laws, that they passed the Howey test, that they are essentially securities, but they haven't registered as such. And therefore, banks are less likely to want to bank entities that are potentially engaging in securities fraud. And you have the government kind of taking pretty aggressive actions behind the scenes to try to get those companies to have more banking frictions. So that one, I think, is probably going to be with us for a while. Bitcoin itself has a clear regulatory picture from a security standpoint. The chair of the SEC, the chair of the CTFC, like Commodities Futures Trading Commission, multiple different regulators have pointed out that Bitcoin's not a security.
Yeah.
It's a commodity. Yeah. It's very clear in that front. I think the threats to Bitcoin are not securities related, but they're more choke point related. So it's either trying to kick miners out of the country or trying to increase the frictions of getting money out of fiat currency into buying Bitcoin, similar to what we've seen in developing countries. It's kind of a funny thing where if you see a government move to restrict your access to Bitcoin, it's actually kind of an advertisement that you probably need Bitcoin.
Right.
Because if they weren't threatened by Bitcoin, there'd be much less reason to do that. You generally only see that in countries that are having pretty severe currency problems. But because the United States and European Union are large enough and responsible for a significant percentage of capital flows, that does pose a price risk with any sort of, let's say, 18-month or 3-year period for Bitcoin if they were to aggressively go after choke points. Basically say that, it's still legal to hold Bitcoin, but the banks can't send money to Bitcoin brokers, crypto exchanges, anything like that. It would kind of narrow the fire hose of, I think that's one of those things that would damage it for a number of years, because especially institutional capital would be much less willing or much less able to get into it. I think we'd have to ask what is happening at that time that causes them to make such a drastic action, right? So the United States is this environment that encourages, innovation. It encourages rule of law, open markets, no capital controls. And if you start to get those types of capital controls or those types of industry-specific crackdowns, you'd have to ask what's happening. Why are they so concerned about the dollar or so concerned about the rise of Bitcoin that they would take such extreme action? And I think it's kind of like Nigeria and Argentina, maybe less extreme, but in those environments, when they cut off Bitcoin, again, it's a really good sign that you probably want Bitcoin because something's not going right with the currency that would trigger such extreme action.
As explained by Alden, U.S. regulators are engaged in an ongoing battle against the broader cryptocurrency industry, excluding Bitcoin. However, there's a subtler yet equally significant conflict they have with the leading cryptocurrency. Unfortunately, regulators often lump Bitcoin together with unregulated securities, like the FTC token. Declaring an all-out war on Bitcoin and the entire cryptocurrency industry, without providing clear rules, would be a grave mistake on the part of U.S. policymakers. While such actions will undoubtedly impact the industry, potentially even more than China's mining ban, it will not mark the end of its growth and development. In her interview, Alden delves into her views on de-dollarization and its potential impact on Bitcoin in both the short and long term.
I think in the near term, de-dollarization is probably overstated. It's easier to say something like, it's easier for BRICS nations to say we're going to do something than to actually agree on it, build it, make it credible, and start using it at significant volumes. So, we've seen kind of a period of de-dollarization. I think the long-term trend towards de-dollarization is clear. Basically, this kind of period is somewhat unnatural to begin with. If we have a country with 5% of the world population, but we're responsible for like 90% of international currency swaps, that's kind of a long-term unsustainable situation anyway. We've seen, for example, as India and China and the BRICS nations in general become a larger percentage of global GDP than the G7 eventually. That does result in an inherently more multipolar world, and that necessitates a multipolar currency world and a multipolar payments world so that one country can't just shut off payment systems of a country that's actually in some ways larger than itself. That wouldn't make sense. In the near term, I think some of these moves are, while they're happening, I think people might overstate the speed of them happening. So, for example, de-dollarization is not really a big theme for my, say, 1 to 2 year Bitcoin outlook, but I think it does factor into, say, a 5+ year Bitcoin outlook. I think that kind of like how when you have de-dollarization, there's more interest in central banks in gold as an asset.
Record buying,
Exactly. I think so. Right now, Bitcoin is generally too small for most sovereigns. You have some smaller ones like Kingdom of Bhutan that's mining Bitcoin. They're able to kind of get into that space, but generally it's not large enough to be a sovereign reserve asset. I think if you have another couple cycles of Bitcoin growth and you add to its market capitalization, to its liquidity, reduce its volatility, I think it could become a relevant sovereign reserve asset for some of these countries that want more independent, unsanctionable reserves that they can also use as unsanctionable payments. So I do think that Bitcoin is one of the solutions they can turn to, but right now it's, except for the smallest countries, it's still in many ways too small for these bigger sovereigns to fully take it seriously.
Do you see Bitcoin being owned by central banks in 10 years' time?
10 years' time, I do. I think it starts with the smaller ones, and it also starts with any of these small countries that not only maybe want to hold Bitcoin, but they want to signal to Bitcoin companies that they're a friendly jurisdiction. So whether it's El Salvador or Switzerland or Liechtenstein or Dubai or Singapore, whatever the case may be, these smaller countries can say, we're a neutral ground. We're conducive to working with you. If, for example, the United States makes it a pretty hostile place, then they can gather some of that business. So I think there will be probably havens. Those havens might grow in size, or kind of medium-sized havens might also want to enter that market. But I think as you get a decade in the future, I wouldn't be surprised to see larger sovereigns own Bitcoin.
Once the dust settles, it will become evident that regardless of the threat to the United States and the dominance of the dollar, there is a compelling need for a censorship-resistant, mathematically secure, and scarce asset built on an incorruptible network. The US dollar and other rapidly declining fiat currencies simply cannot offer the same benefits. In a multipolar world, investors will naturally gravitate towards sound and hard money, with Bitcoin emerging as the soundest and hardest asset among them all. We would love to hear your thoughts and observations on Lyn Alden's interview. Please feel free to share your comments in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.